What's going on, guys? Welcome back after a long hiatus here on Let It Grow Investing. I'm Jeff. We're going to get everything covered, get caught up, get back to speed on what's going on in the market, why I've been gone, and what's going on with life. So second cup of coffee, matching mugs up top and right here, and let's get going with it. Nothing like a second cup of coffee in the morning. First one's probably better, but the second one's pretty good too. Anyhow, let's roll with it, guys. So, we had a soccer tournament a couple weeks ago, 2 weeks ago. I forget what was going on. Actually, 2 weeks ago, I was in St. Lucia. Last weekend, I'm not even sure. Yesterday was my son's birthday, so it's just been crazy around here, going here, there, and everywhere. Yeah, a lot of different things going on with the market, a lot of different things going on with me, but how are you guys doing? How's the portfolio? How's the market treating you? We've seen a couple shakeups in some of the storage and memory markets. Those have kind of peaked. Now we're kind of seeing a sell-off. So I did want to talk about that. I'm watching Micron. I've told you guys all about the options plays that I'm writing on Micron, when I'm trying to buy it, when I'm trying to, write those covered calls. Right now, it's looking like maybe buy some more calls on it if it gets again under 900. It keeps wanting to bounce off of that, and then you can sell it if it gets closer to 1,000. Maybe write like a 940, 950 kind of call option, and then sell it if it gets over that or close. However much money you need to make on it, that's up to you. But let's go ahead and share just what's going on in Micron. Let's take a look here and see what's up. This is just ChatGPT, nothing too crazy, but it does give you a good upgrade as to what's going on out there. So we are down about $57 today. Looking at this, right, we're down about 5.81%. So pretty big sell-off. And last week we did hit down to like 890, 892. I'm sure it's on this chart here somewhere. Maybe not. That was just the day, right? We got the day. If I pull up a 5-day, we should be able to see it. So we did get down here, call it 890. I'm not too sure where we're at right there, but at least on my chart with everything going on here, there we go, 885. I can see it now. So about that point, I was thinking, I should probably write some call options. I didn't, and I kind of kicked myself because when we ran right back up to 1,027, I said, man, if I would have wrote it for like a 940, I would have been printing money and sell it off around 10, 12% up. That's what I've kind of been doing. That's been the volatility in this stock. So I was kind of thinking that, but then I also wasn't thinking that it would break like this 970, 980 type range, and we went right through it. So I said, you know what, maybe we can kind of keep going down. And if we did, I didn't want to be, wrapped into this call option. So I'm trying to see what it's going to form here. Maybe we form a base right around 880, 890. Maybe that is where we get some sort of support. But we already broke through that first level in the upper nines, and that is kind of what I was looking at. So, it's probably a little bit busy getting back from being out of town, and also not really too sure what the market was doing. So I didn't really want to dive in and then have options calls expiring as I was kind of swamped with work. So I didn't make that play, but it would have worked out. And that's kind of what I've been telling you guys. I'm saying, look for those dips in this thing, and then you can write the options or go the other way. I guess you could put some puts on it, but that's up to you, right? So I did have some problems with Delta Airlines. I wasn't really going to talk about this, but I'm just going to say it because I just mentioned to a buddy that I was going to short it on Monday, and here it is Monday, and I'm probably not shorting it, but it's just an unfortunate event of travel anymore, right? So we got stuck in Atlanta. We were going to St. Lucia. We got stuck in Atlanta, and there's not enough flights going to St. Lucia. The airport is open for like 5 hours. They get flights in, people off, people back out, and they're closed, right? They don't have morning flights. They don't have night flights. Everything is around 12 to 3:30, and that is all their flights. So we got stuck there. We got stuck in Atlanta because of a Delta problem. Their one plane couldn't taxi quick enough, and the other one left early that we were supposed to be on. Long story short, we got to the gate after a lot of running, and we missed the flight by 2 minutes. And if they just didn't leave 10 minutes early, we would have made it. But it is what it is, right? But now they don't want to reimburse us for the fact that they didn't want to pay for the fact that we missed a night in St. Lucia, saying that we got us there. We used the flight. They did their part. but that's not really the point, right? We missed a night based on their disorganization, I'll say, right? They weren't organized at the gate. They could have just said, hey, we got 2 passengers waiting to get off. Don't leave that flight early, right? Even if it left on time, I wouldn't be mad at them. But the fact that they left early, knowing that we were sitting there, is pretty frustrating. So, I mean, first world problems, I know it is, but that is what it is, right? So that's what I'm looking at. I'm not shorting them, but again, like I just don't see a reason to invest in airlines, right? Because even when it was blue skies and sunny, they spent more money putting us into a hotel. Now they're getting bad press because we missed out on the flight and they didn't reimburse us. Yeah, they put us in an airport hotel for a night. Thanks a lot. But we didn't get to where we wanted to go. They had to spend more money. That means their margins are tighter. And apparently this happens quite a lot. And the people at customer service, you're lucky to be able to get out tomorrow instead of 2 days. Normally these flights are booked. So there's 23% of upside here. I just don't like airlines, right? As far as the travel experience anymore, it's really tough. We had that pilot shortage. We had all these different connections. We've got fuel problems. We've got employment problems. People want more cash to fly planes or to work there, which I get. Life is expensive, but this all hurts the airline stock at the end of the day, right? Rising costs, any little hiccup, and they are behind on what they were going to be making on that individual flight. And those flights down to St. Lucia aren't cheap. I'm sure there's still money left. But that's not the point, right? We're still left with this bad taste in your mouth about we didn't get to where we wanted to go. We got stuck somewhere else, and now you shorted us is how we feel. So, and that's not the only time I've heard of something like this happening. So I'm just not an airline investor. I've had Delta in my portfolio. It was probably during COVID. I think I bought it in the 30 kind of dollar range. It was probably somewhere back here, like maybe 22, maybe even before this. It was probably like 20. But yeah, I mean, I did okay on it, but I bought it knowing that things were awful and hope they kind of made it out in one piece. And I guess they did, but I just don't want to own it long term, right? So it might have been a trade, but it's not a long-term hold for me because eventually it seems like all of these companies either get bought, acquired, sold, or go bankrupt. And I just don't want to be there. It doesn't seem like they have the staying power, and someone else is always trying to come in and undercut them, do something slightly cheaper, make someone more upset with charging bag fees or, charging you to get on the Wi-Fi or whatever it is. It just seems like every time you're turning around, they're nickel and diming you about any single thing that they can. And it's just not a positive experience anymore. So that's my thoughts there. We're looking at SKHY. SK Hynix just went public. Now, this is an ADR, so it's an American deposit. I forget repository. I forget the exact terminology. But more memory stocks coming into the mix. So this also affects, and this is our 5-day, right? We've got a 5-day. We don't even have a month yet. So we're looking at, is it just today that this is actually active? Yeah, this is just today. I thought it went public last week. I was looking at some articles, but maybe it got listed and today's the actual first day of trading. So it is trading down, but this does bring some more memory chip stocks into this is on the NASDAQ. So it does a little bit to other plays, Western Digital or Micron, or I don't know how much overlap there is with Broadcom or Qualcomm or any of the other ones. Texas Instruments, they all have to give up a little bit more market share, and some of the money that was going in those now might be going here. So is it something that you want to be in long term? Possibly. SK Hynix says that the memory market is going to be accelerating into the mid 2030s. So is that somewhere you want to be? I do think that it is a smart place to be. Do you simply want to be into one name, or do you want to be into all of them, right? You could look at something like an SOXX, which is going to be a semiconductor ETF, right? So that can give you a multitude of stocks that are in this space simply by buying one ETF, right? So that is another way you can play this thing. I don't just want Broadcom. I don't just want Qualcomm. I don't just want SK Hynix. I want all of these different players, right? So when you're buying a share of SOXX, you're getting Micron, AMD, NVIDIA, Intel, Broadcom, AMAT, KLA, LRCX, MRVL, and Taiwan Semi, which is TSM. So you're getting all of these by simply buying one thing. All of them have done really well. I mean, if you look at the 3-month change on all of them, they're all positive. Broadcom's only 3%, but you got Micron that's up 119% in 3 months. AMD, 119% in 3 months. And reminder, I was telling you a year and a half ago that Micron and AMD were going to make you money, right? I was telling you that. We're still there. I didn't tell you to buy Micron at 1200. I did not say that. Don't quote me on that. I didn't say it. I told you to buy it when it was around 110, 120. AMD, I was telling you under 100, man. Scoop this thing up. Grab as many shares as you can. Stuff them under the pillowcases or under your mattress or wherever you got to put them. Get as many shares of these two that you could. Hey, we're there. I mean, I hope you guys made money on this trade. I really do. So yeah, I mean, I still think that all of these have a bright future. Again, if I go back to why Micron is falling, was I not sharing that? Sorry guys, this was a SOXX, my fault. So yeah, this was the top 10 there. Micron, AMD, yada yada yada. And now if I flip back over, you can pause it here if you need to see this list, or just search up SOXX, and I will share this tab instead. So now we are on Micron. Why is it going down? Right, profit taking. If it made 119% in 3 months, people take profits. And like I said, it was a one something. Maybe this time last year, earlier last year, and now it's in the 900 range. So yeah, people are taking profits. People said, yeah, it got up to 1200. It's coming back down. I don't want to be there if it gets to 5. I'd rather cash out when it's at 9. So I'm going to sell it now, right? I'm okay with that 9x play. I'm fine with that. High expectations. They had great earnings. Can they keep doing it? That is always a solid question. Is this the peak? Are we at the peak in 18 months? Are we at the peak in 36 months? I think if you see the peak in sales being 18 months out, people are generally starting to sell this stock. So that does make sense too. If you think that, maybe January of 28 is kind of the peak cycle, you're going to start seeing people sell off. I don't know that it is. I think we're probably closer to 2030. I think we have more of a run. There's a lot of different things pointing to that. You still have Amazon raising debt. We are still seeing them raise debt to build out AWS, build out cloud. They are looking to raise $25 billion. Currently, they have interest of about $62 billion on a debt raise. So yeah, what else we got? Semiconductor rotation, right? We're rotating between winners. Money has flowed to companies like SK Hynix, right? We just talked about that. Strong developments there. They just went public. That's got short-term pressure on all of the other memory stocks. That makes sense. That money's got to come from somewhere to go somewhere else, right? If people are looking to buy SpaceX, maybe they're rotating out of a Micron, right? Maybe they're doing that. So yeah, we got concerns about future AI spending. Are we going to continue spending this much? And when does that fund stop? If it stops in 18 months, like I said, people are going to start selling this thing. If they think it's got a 10-year runway, this is still hot, right? I don't know that anyone thinks that this spending is going to continue in the same fashion on AI as it sits into 2036. We don't see that right now. Now, is that going to change? Is that money going to go somewhere else in chip stocks? I think it will, right? We've seen that with NVIDIA. NVIDIA was a Bitcoin mining stock, right? It was a computer video game card stock. But every time it started to flop on something else happens. It went from Bitcoin, and then it went to AI, and now it's, artificial intelligence. Maybe it goes into robotics. Maybe it does something different. But I think that money continues in a lot of these chip stocks. We just don't know where it's coming from yet. So that is my thoughts here. Has it changed? Not really, right? Bullish thesis does remain. There is still really strong demand. AI servers continue with more memory. Memory pricing remains favorable. Can other people hop into this business? Yeah, they can, but it's not overnight. It's going to be that 18 to 36 months before other people are really rolling out the factories to make the chips to meet the demand. Now, could that be Amazon? Can it be Microsoft? Could it be Nvidia or Western Digital, SK hynix, or any of that list on SOXX that I showed you? Yeah, it can. So again, do you want one stock that can give you 10x returns, or do you want that whole basket of stocks that might not give you 10x, but it could give you a 2x return over, let's say, 10 years? That's the big question. Which way do you want to play it? And some people are going to sell out of Micron and simply buy the SOXX, say, hey, I still want to be in the space, but I made 10x. I need to dial back. I need to keep this cash safe, right? We worked hard to get this money. We did a lot of research. You listened here. You did some homework. And now I want to keep that funds. I want to keep it safe, right? So that could be a play. That could be the way that you're looking at this thing. So next up, Amazon, right? We're looking at this. They're raising $25 billion through an 8-part bond sale. So where is this money going to go? Total debt issuance past $72 billion. Company's heavy borrowing is designed to support a planned $200 billion in capex. Majority is going to AWS cloud computing, building data centers, and developing custom artificial intelligence chips, right? I just said that. They are going to be building these chips to try to take some of that market from Micron, from Western Digital, from SK hynix. They're trying to make their own. Now, it's going to take time. They're looking at this $200 billion to make their own, build out their cloud center, build data centers, and make these chips. So other competition is coming. So again, this is why Micron's going to sell off a bit. I don't know that we're there yet. But if Amazon's going to be ready to make these chips by 2029, 2030, I think we have to be mindful of what that means to our portfolios, what that means to our positions, right? That pretty much just says everything we just said. We're looking at what they're doing. We're looking at why it's there. We're looking at all the different opportunities that we have and how to keep this money safe. I don't necessarily personally want to sell my Micron shares yet. I really don't want to have the tax bill from it. That is where I'm at. So I keep writing covered calls. I keep trying to generate some more cash off of it. The covered calls have probably made me about half of what I've originally invested into Micron. So I'm okay there. Yes, I will get a tax bill on the covered calls as a short-term capital gains because I'm selling them. Every time you write those covered calls, I believe it is all short-term capital gains, even if you're doing leaps, if you're doing like long-term covered calls out into 2028 or whatever. Say I wanted to write an $1,800 call on Micron, I would still be getting that short-term capital gains because I would be writing it and getting the cash today. I believe it is how it works. Don't quote me. I'm not a tax guy. It's not. That's not my lane, right? All right. So I saw this next. This is kind of weird to me. My son got a Fitbit watch for his birthday, and he just keeps messaging me on this Fitbit app, which is kind of crazy. But I guess it is what it is. We've got this Fiat, right? I saw a Fiat Topolino, which was a small restaurant in Southern Maryland where I grew up. That's the only time I've ever heard this word. I'm sure it means something in Italian, but I'm not Italian either, so don't quote me there. I saw a street legal car from Fiat for $14,900. I'm like, man, what's going on? Average sales price of a new car is 40 grand. And then I read into it, right? It's got an 8 horsepower motor and a top speed of 19. It is a glorified go-kart. They call it a glorified golf cart. I think I've seen golf carts go significantly faster than this. It feels like 46-mile range. I guess it could be a golf cart with a roof. Is anyone buying these? What are you buying this for? I mean, even a neighborhood speed limit's 25. Like, where are you putting this? But then again, I mean, I see scooters and e-bikes on the road, like electric scooters, like not sit down ones, but one that looks like a razor scooter that a kid would ride. And people are doing like 20, 30 miles an hour up and down the street on these things. The one wheels, I've seen them on the road. Like, what are we doing? Why do we have so many people on these, I guess, toy vehicles riding around? I don't know. Maybe I'm alone on this one. I'm not too sure, but it seems like there's a lot more people on the road with things that aren't street legal or roadworthy, and no one even blinks an eye. It just feels weird to me. But I don't know who's buying this for $15,000 to do 19 miles an hour. Like, where are you putting this thing? Like, on the road wise, like I get that you can drive it. I get that it fits anywhere, but where are you taking it? I'm not too sure, and I don't even know that I want to be behind one or near one or in an accident in one. I just don't know how this is smart, but I don't know. Correct me if I'm wrong here. I just don't see the validity of having this on the market, and who's spending $15,000 on a Fiat that can't go above neighborhood speed limit kind of speeds, right? That just doesn't make sense to me. But yeah, so what else is going on in the market? Let's take a look here. We're going to get back to our E-Trade. I've been watching Bitcoin. Bitcoin doesn't really seem to be doing too much. I feel like more and more people are saying that it is tied to inflows and outflows rather than being on a 4-year cycle anymore. That is a little bit concerning. I am watching more Celsius. We've been looking at that one for a while. SoFi is kind of coming back up. Let's take a look at Celsius and then SoFi. I still think that Celsius is a good buy right here. I really do. And I know it was much higher at the start of the year. It was $48 and now it's $30. I still think that the amount of short interest in this, we're going to start seeing some of these people having to buy back these shares. I really do think that. I think this thing is going to kind of keep growing, and I don't know that the shorts are going to win this thing. I think that this 83% of upside, average price target of 55, feels fairly comfortable to me. Just with some of the numbers, some of the different things that are going on with the mergers, the growth into Europe and abroad, I think that this could be a winner here. I mean, I said I was watching it at 48. I was probably buying it at 48. It was definitely on the list January 1 to add it to the portfolio. I have been adding it. I've been adding a lot more since it's been down in the 30s or under that. I know we did get down to like 27. That felt like a decent place to be adding this as well to me. And again, it's kind of a hold your breath and dive in. Does it keep going lower? I don't know. I feel like we've got enough growth and enough revenue here that I think at some point it just can't go much lower, and it just gets to be where it's too cheaply valued, right? So I'm looking also at SoFi. This thing has been building this base. I know we got some price target cuts, and I mean, some people saying 21 on average. I do think that this is kind of poising itself for a breakout. We have a bottom here in April. Well, that's at March 28th, and we had a higher close. So we didn't break that level of support in May, and then we didn't break that level of support in June. So we have a triple bottom. We kind of did opposite up here. So if we can break above where this was at the high on April 18th, I think we have got a good room to run, right? Could it break down and go below that? Certainly. But we're already above where we were at this high point in end of May. That looked like an 18. We're sitting at 1855. So we are above it. I do like that we came above this the second high that failed to break the first one. And I do think that we can move higher, right? I do think there's a lot of consolidation, a lot of people trying to figure out where this thing goes. I think that 30 came too easily. We did have a triple top here, and then it did kind of just roll right through the bottom, right? So it almost looks like the same setup here, except for the fact that some of these lows were higher lows, right? So we had this upward trend at the bottom here, and this kind of looked flat. Like it hit it, and then it almost just looked like it didn't really break out above to the upside here, and then it just went down, right? So I'm thinking this upward trend here and the fact that we're already above this May 28th ceiling, I think that's a good sign. And I just do like the stock. I think the revenue is pretty solid. The growth is solid. There's a lot of different things going well here. I don't really remember exactly why we had this big run. If this was due to interest rates, this was definitely after the banking charter. So I don't think it was that. I forget exactly what was going on last October with SoFi. Someone can let me know in the comments as to what was going on there. But I do think that we are going to be poised for a run up here. I think we can get higher than this 21. I think we could probably get up into the 23, 24 range and kind of figure out where we want to go, right? This is kind of this weird space, right? This almost feels like it shouldn't have happened. Like we had this ginormous run up and then we kind of came back down to reality. But I think we can get a nice kind of smooth trajectory towards 23, 24 rather than this massive run up and then quick decline, right? That is my hope here, is that SoFi can start behaving more like a banking stock, less like a meme stock, and kind of get some traction here going forward. So we got that. We've got Nike. We've been watching this one for a while. Where do we go here? Back to the coffee. That's where we go. So we've got sitting at 44 and a quarter. Average price target about 49. I'm not saying it's a steal of a buy. I just do think that at some point we get away from a lot of the drawdown, a lot of the negativity that's been in this one for quite some time. I mean, I've been trying to add some, not going crazy. Salesforce, man, we were looking at the beginning of the year, 252, it's at 168. I had added down in the 150s, right? That's where I was definitely like pulling the trigger, trying to get more CRM into my portfolio. Adobe, let's cover that real quick because we haven't looked at it too regularly. Beginning of the year was at 329. It's at 227. I've been adding. I think I'm actually positive on this thing. So was I watching it at 329? Yes. Was I doing a lot of buying? No. So now I am getting to the point where I'm positive on this thing. All the software stocks have sold off due to AI, due to a lot of different things, due to valuation, people thinking that all the AI models are going to outdo what an Adobe can do or outdo what a ServiceNow or CRM can do. And I don't know that that's necessarily the case. I think they're all leaning into having agentic AI into their businesses. And I do think that that can be a huge growth driver for them going forward. Plus, I think that they have sold off too much. So again, that is Adobe, 12% of upside. ServiceNow sitting at 110, 27% of upside. And we said CRM, 28% of upside. And CRM around 46% of upside. So you got to take a pick if you want one of these. I think that Salesforce is probably one of your best bets right now. I still think that a lot of the cybersecurity plays could be purchased as well. I do think that they're going to be needed in the future of AI and keeping everyone safe online. I don't think that changes. I think that only gets amplified by the amount of AI that is out there, by a lot of the fake calls, the fake scams, everything that just seems more realistic, and you feel like, man, you need a security degree to basically stay safe out there. So I think that those companies are going to be more and more necessary as we go forward, right? So I think that those are going to be safe for the foreseeable future. I really do. We were going from Salesforce. Where were we going to go? That's where I was going to go. SpaceX. Was it Citi? Someone just came out with an $800 price target, and it might have not have been in the 1 year. I think it might have been further out. Oh no, Raymond James, 800. That is on a 1 year. That's pretty egregious. That is out there, man. $800 takes SpaceX market cap over $10 trillion. And somehow Raymond James think that this is going to happen and SpaceX is going to be double the size of NVIDIA in 1 year. I don't see it. I really don't. I just don't see it. I mean, we're at 139. I mean, down to like 110. That's where I'm probably going to buy it. But I don't see an 800 price point on this thing within 12 months. I just do not see it. I mean, that seems out there. I mean, crazier things have happened, but that seems out there on a stock that is already worth Let's see real quick. What are we worth here on market cap? 1.9 trillion. So yeah, he thinks we're getting over 5x from here. Thinks that we get to 800 by, July of 27, and I cannot see that. If it happens, man, I hope you guys are holding boatloads of SPCX, but I don't see it. I don't know that the numbers are there. The earnings isn't there. They're probably pretty strong on revenue, but I don't see a case where they get to $800. 250, sure, right? I mean that seems like a blink of an eye for traders to run this thing up real quick, but it's not for me. So yeah, we've got we talked Amazon. Who was it that was just talking about Palantir, Microsoft, and Figma? They said, I think it might have been Citibank. I might be wrong on this. Let's see if we can find anything saying that these three stocks could be purchased here. And was it Wall Street Bets? I hope not. That doesn't seem like a decent source to go to. But someone was just saying that these three could be purchased here and feel pretty comfortable about it. Now, I definitely agree on Microsoft, and I definitely agree on Palantir. I can't say that I follow Figma close enough to know where they're at. I can't be a master of all stocks. I don't even claim to be a master of any of these stocks, but I can't say that I follow it close enough to give you any kind of real insight there. But Microsoft at 386 makes a lot of sense to me, and I'm trying to increase my position here. Right, Microsoft beginning of the year was 473. Now we're at 386. It seems like a good point to buy this thing. There's 45% of upside. So would you rather buy a Salesforce at 45% of upside or a Microsoft? I'd rather buy Microsoft. That's just my opinion, right? I think that Microsoft is already in the lead. I think that Salesforce is trying to catch up to everything that AI is doing. But Microsoft feels like a much better pick for me with the same amount of upside. Palantir, Palantir's traded off. A lot of people are trying to justify the valuation, but I really think that Palantir can be a great stock to buy and hold from here, right? I mean, I remember when we were buying this thing at 15, and it felt like a great stock. And then it ran up to 2 something? Did it run up to 2 something? Am I remembering this right? Yeah, 207 in November. So I feel fairly strongly that Palantir can get back on and do something here and feel pretty comfortable, right? So we're in a buy rating. We got a 5-year return of 444%. We've got I just kind of want to see some of the numbers. Where are we at on this thing? 4 upgrades, 47% of upside. That is what it is, right? I mean, that's just numbers from analysts, and we just saw a SpaceX price target of 800, so that doesn't really mean much. But earnings, right? Yearly earnings from 75 cents. They're going to double roughly in 2026. And then, they're going to kind of creep on up. What is that? Another 30% for 2027. So yeah, it's still gaining relatively strong. Annual revenue for 2026, 72% up. And, probably another 77% by the end of 27 is what's forecasted. So forecasted annual revenue growth rate from here to the end of 27 is 149%. It's pretty massive, right? We see those numbers out of NVIDIA sometimes, but 149% is huge, right? It's massive, especially on a company this size. It's not like you're starting from some small startup to 3 years out. So it feels really strong. Forward PE, it's at a 2% premium. So a lot of people get wrapped up into this PE of a 79 times. And that is very difficult, right? That's not necessarily what we want to be, especially when you're looking at the S&P at a 21. You are at more than 100% premium to the S&P, right? You're almost 4 times. But what do we see here, right? What's the actual growth of this company? And then once we get down to that, then it seems like, oh, that's not a bad purchase, right? So if we're at a forward peg of a 1.4 and you can go up to a 2.2, yeah, you're another 30% higher going from a 1.4 to a 2.2. So if they get up to back to that 2.25 year average on a peg, that gives you at least 30% of upside. Couple that with the amount of revenue growth and earnings growth that they have, and it feels really likely that we could potentially be 45% undervalued here. And there's just a lot of distractions coming from Palantir, right? It got a little too far ahead of itself, maybe similar to what a SoFi did. But now I think that both of them can kind of be bought. I'd feel more comfortable buying Palantir than SoFi here. So I think that this could be a good ad. I do like it. I like where they're at. I like, having some of the forecasters, the analysts come behind this thing and say, hey, yeah, this is undervalued while still being a forward PE of a 79, right? I get that that's crazy, but at the same time, you're getting a stock that is growing like crazy. And it feels fairly valued on some of these. And then you look at the forward PE or the price of sales, and you're like, man, 57 times, that's just nuts. I don't want to be anywhere near that. But then you realize that when you're buying it, you're also getting a company that's increasing revenue 150% over the next 2 years. You're getting a company that is doubling their earnings per share this year, right? I mean, that's huge. And for a lot of people, I just don't know that they see that. And I feel like a lot of people see that, hey, yeah, we got a 57 time price of sales. I'm not buying that thing. You shouldn't buy that thing. Don't put a nickel into it. But then you see the actual growth that they're able to churn out. And we're hoping that they have that staying power, that they don't have someone else that comes in and tries to start taking their business. Similar to like a Micron with an SK, Hynix, or Amazon coming into the space, or anyone else getting into that space. Is Palantir safer? I think they are, from the standpoint that they have the contracts with the government. And once you get onto these platforms, it's really hard to get off. Versus memory, it seems like a fairly easy business to get into, very cost heavy, but a lot of people want to get into it because there's margin there. Versus Palantir, where there's a lot of margin there, but it's very, very hard to enter into this business. So for those reasons, I would definitely look at a Palantir. It might not be for everyone, but I do think that it does make a lot of sense in some situations, at least a small portion of your portfolio. I'm never telling anyone to go out and put 15, 20% of your portfolio into any one stock. I just don't play like that. But that's me, right? That's my 2 cents here. So a lot of other stocks make sense right now. I still like Netflix in the 70s. GE Vernova is over 1,000 now. Let's see if I can get back to that. Let's go back to GEV. Let's see here, GEV. We will share this tab instead. Sorry about that. Yeah, we're at 1,062. We looked at this at the beginning of the year at 679. It's moved up nicely, right? If we look at year to date, yeah, we were somewhere down here when I made this little note, 679 on the 2nd. Yeah. So we moved up nicely here, right? 400 points roughly. Nice move there. I'm not buying that. AMD definitely moved up since the start of the year. NVIDIA's almost flat. Where would I want to put my money right now on any of these names? Still really like Netflix. SoFi, like I said, I'm not really trying to add a ton there. I have a fair amount of shares. Nike, I would still add. I'm not as crazy about it. I do like. I'm not as crazy about it because I don't know that it's going to turn around that quick. Salesforce, I do like. What was I just saying? Amazon. Which one was I looking at compared to a CRM? Just forgot. I'd have to go back to see what my searches were at this point. What did I just look for? No, it wasn't them. I can take a look. But on this list, I mean, Nike is, I think, a 2-3 year turnaround. I don't think it's going to be overnight. SoFi, it could go up to 24, but that isn't the craziest move for me. I do think it's a good entry point, but like I said, I already have enough. Adobe's got more upside. What was the other stock that had like 40-some% of upside? Now it's going to bother me. Amazon does not have that, so it wasn't that. Dang it. It just went out of my mind just like that. Maybe I can just go back a few pages. Is that it's Palantir. It's Palantir. I don't know why I'm not. That's not even on the investing challenge. That's why it's kind of tricking me. Where do we go? I mean, I think Microsoft is probably our best bet as to what to buy right now that can pay off in the next 12 months. I definitely think that. I mean, I think at 44% of upside, fair valuation here. Let's do a little bit of homework though, and then I'm going to get out of here because I got stuff to do, guys. So yeah, we're at 389, right? We're at a 389. Refinitiv says it's a hold, which we'll see why. I never understand Refinitiv. Sometimes it's a buy and they have no upside, and sometimes it's a hold and they have like 70% upside. I'm like, that doesn't make sense. But I guess the price targets and all change before the buy ratings do. I guess that's why. I'm not too sure. So yeah, we got decent returns over 5 years. Not too concerned about the dividend here. That's not where we're looking at. We got 47% on price target upside. We've got a nice path higher, right? We're at $13.64 of earnings per share in 25, going up to an average of, this is forecasted, 16.78 cents for 2026, and another $2.60 on top of that for 2027. So 13.64 now, 19.39 by the end of 27. 21 strong buys, 37 buys, 4 holds, 0 sells of any sort. Annual revenue increasing 17% for 26 and 36% for 27. That feels nice for the size company that this is. It really does. That's a nice mid double digit return on forecasted growth per year. We've got dividend growth 9.9%. Dividend payouts low at a 21.7. That means they can still use this money to build out all the things that they want to do. They're not just reliant on making money to pay dividends, which is good for a growth company. You don't always want the stocks that are just spending all their money paying back dividends. The forward PE is at a 20.8. That is cheap. That is right under even what the S&P 500 is for a stock that returns a lot more than what the average S&P 500 stock does. PEG ratio 1.2, so almost half of their 5-year average of a 2.0. So yeah, I feel comfortable with this. Price to sales seems high at a 9, but it's cheaper than their 5-year average, which is 11.8. S&P 500 average is a 3.5. So cheaper than normal, more expensive than the S&P. Forward PE is cheap. Trailing PE is cheap. Forward PEG ratio is cheap. The growth is good. Revenue is good. Earnings per share is good. Yeah, this is where I'm putting $200, and I'm just going to get off of here and do that right now. So that is what I got for you guys. Thank you very much for catching back up with me. I think we covered a lot. We covered SpaceX. We covered some Adobe. We covered all the stocks in the investing challenge, Nike, SoFi, Salesforce, Adobe, all the software as a service companies. We covered some storage companies, some data centers. We covered why the Fiat Topolino is pretty much pointless, I think. At 19 miles an hour for $15,000, you could buy a go-kart and put a roof on it, I guess. So yeah, that's what I got, guys. I try to cover as much as we could in a short bit of time. Thank you very much for stopping by. Please make sure you like, subscribe, and share. It really does help the podcast grow. So thank you very much, and I will catch you in the next one. Take care.